Over the past few weeks, market volatility picked up at a time when the promise of unending central bank liquidity was in jeopardy. Investors tried to get a grip on whether Fed Chair Jerome Powell would be able to engineer a soft landing by taming inflation without choking growth. Nastassia Arendse spoke to Warwick Lucas, head of Galileo Securities, about his perception of the market in 2021.
I think interesting is being kind at a substantial level. I think the initial approach for 2021 was the recovery play. I think at the end of 2020, we'd seen earnings devastated by both lockdowns and the impact of the virus, and companies had to show whether they could adapt or whether they would simply die. So your traditional defensive categories, I think, apart from the likes of pharmaceutical producers, suddenly didn't apply anymore, and the likes of remote working and technology was the new defensive. So recovery play then was quite a broad category of anything that wasn't part of the new defensive. And I suspect that 2022 will, in its way, be somewhat broader, but also more specific. And I think this will mean that the recovery will focus on normalization. And so you might get more economically targeted and focused companies, and also more economically sensitive ones like small caps, for example, will come to the fore.
Interesting. When I was talking to the other market analysts that we typically have on the show about what the surprises were for them for this year, the one mentioned the supply side issues, and to the extent, the level of supply side issues that we went through. And then the other touched on the resilience of some of the markets that he's invested in. What would you say was the biggest surprise for you?
Okay, so I think that the supply disruptions were definitely a big surprise factor. I think obviously it was reasonable to anticipate that COVID would interfere with traditional supply chains. But these supply side disruptions, when you combine them with a rigorous demand side recovery, made for quite a strong inflation recovery. Now, I think while it's been said that the result in inflation is going to be transitory, I mean, that remains to be seen. And more than likely, there's a little bit of systemic inflation in there. So while this newfound inflation is deemed to be acceptable, it's going to be important, I think, going forward to see how its trajectory unfolds. We've been living in a long period of near deflation to the point that inflation has virtually become forgotten as a threat. But inflation's tricky because in the beginning, everyone wins, and in the end, nobody wins. So we'll be looking at ongoing guidance from the Fed to the extent that they try to get the threat of higher rates to do most of the work, so that when rates actually get hiked, businesses are actually already appropriately positioned. So we hope.
Okay, so when it comes to, I suppose, signals in the market that you're keeping an eye on to give you some kind of idea of where things are going, what are some of those signals for you?
I think the primary signal really is that guidance from the Fed. I mean, that's really, I think, going to be everything, because there's been such a deluge of monetary and fiscal stimulus. It's clearly business as abnormal, and you now have to focus on normalization, and retracting that stimulus is absolutely key. So that's the kind of framework that we're looking at is how does it actually all get unraveled?
Right. So I'm going to throw in the spot here. The other conversation I had with Michael Traherne from Vestec Asset Management is that he thinks volatility is going to be something that will be a theme going into next year, at least for the first few months, right up until we can see what is going to happen with the Fed. Are you seeing volatility as well going into 22? Do you think it might be a bumpy ride?
Well, I think that there is a lot to be uncertain about. One is the issue of where do bond markets in this inflationary environment go, which is almost certainly down. And the next question is, what happens to earnings when there's no longer the degree of aggressive pump priming going on? So quite obviously then when you're doing away with artificial supports, doing away with the training wheels, will the bicycle be ridden in a balanced way, or is it going to wobble like mad? I think it's a normal result to see volatility. What actually transpires is one of many paths. So yes, volatility, we see negative returns from US bonds, certainly. Equities, that's very much up in the air.
Okay, so investing amid Omicron uncertainty, I mean, where are you seeing the most value? What are you buying? What are you selling?
Okay, so I think in terms of the South African context, I'm happy to go with relatively traditional SAPTY recovery situations. So examples that would include banks which were relatively able to adapt their business models to the new environment. I think they are generally quite adaptable businesses, and I think they're sort of well positioned to normalization. I think another business category that will also take well to some kind of normalization is that of the hospitals. I mean, oddly enough, despite being medical business, I mean, COVID was actually deadly for hospital businesses because so many procedures got delayed or deferred. People deferred trips to the doctors and so on. And actually dealing with and filtering for COVID and vetting patients and so on is actually really expensive and difficult for hospitals. And I think normalization for them will be very welcome. I think other players that could be watched out for, commodities, I think still have some potential attractions, although they're not as obvious as they were. And perhaps even carbon-facing companies like your coal producers and so on, very simply from the point of view that as the world embraces ESG and green principles, we're not going to switch off the power station straight away. And the lack of available capital to them will actually mean that what capital there is will actually receive a high return in the short term.
What do you think will be some of the biggest risks for 2022?
I'm going to put it down to a single risk, and that is failure to normalize. You know, vaccinations offer an exit from COVID, but for that matter, so does Omicron. I mean, once most people have had a dose of COVID, the body is used to it. And I suppose it's in some ways similar to a vaccination. That's the principle. In South Africa, we've had a seroprevalence north of 70%, so most of us have had it. The world needs to get back to business and life as usual. We need to be weaned off sugar rush economics. We need to restore democratic and societal norms. And South Africa needs to get back to the process of reforming our government and our economy that frankly was so disrupted by COVID. We need to get back to the point that we left off in 2019, where there was a lot of work needing doing. And I think that got put to one side while the desperate fight against COVID got picked up and distracted us for the last 2 years.